Okay. Can somebody leave a comment just so I can get started to make sure someone's here? Anyone? Comment? Okay. So I think options are pretty straightforward when you understand it. Thanks for joining, everybody. But doing these videos helps me kind of refresh things as well. So it is, especially options. There's some things I forgot, but buying call options, I think it's pretty straightforward. So that's a good one to start with. And then, of course, we could talk about anything. We could talk about selling calls or buying puts or selling puts or even more complex things than that. But let's just keep it simple. Buying call options. So I have E-Trade. So this is from E-Trade. I went to Costco, and then I went to the options. Yeah, it's just options. And I searched Costco stock. We could do any stock, but I just went with Costco, and then I just chose options. So you might have to get approval from E-Trade or whatever broker to trade options. You just have to fill out a form saying, I understand options, and they'll give you access. So so you can do any, you can go as far out or as short out as you want. Like you can do options expiring this week, or you can do options expiring in like a year or two. So I just picked January 21st, 2022 as my expiration date for the option. And then it gives me a bunch of strike prices. So, and you could do more strike prices. You can go below 415 or above 465. So Costco is trading at 440. So generally, if you pick a stock, they'll give you like by default, they'll give you the strike prices within 440. As you can see, they give a bunch smaller than 440 and a bunch higher than 440. So if it's below 440, if that's your strike price, then it's in the money. It's already in the money. But if you pick something above 440, it's out of the money. And you can go as far in the money or as far out of the money as you want. I usually pick out of the money when I buy. I don't really buy options much anymore, but if I was to buy options, I would probably go out of the money. So I picked for the example 455. So that's my strike price, 455. Now, what exactly does that mean? Well, what is this? Okay, so this is okay. So the second screen in Costco on E-Trade it brings up this screen. Hey, Fabian. And there's drop downs here. Study or do for a living. You're very literate in finance. By the way, I'm a student. Yeah, I did finance, I guess undergrad finance and my MBA, but I didn't really, honestly, I didn't learn much in college, very, very little. I learned it mostly on my own and just learning and just reading up things and watching YouTube videos. You don't really learn much in school. You have to actually do it and apply it and actually buy stuff and sell stuff, and it starts to make sense. So, there's a lot of different things you can choose, but we're doing a call option. January 4:55. So we're doing a call option. So you can see the drop down. There's a lot of stuff on here. Call inputs, those are the most common. But then you could do like straddles, iron butterflies, condors. So I'm just doing a basic call option, and you can choose what you want. So I chose buy to open. So whenever you start the order, you have to buy to open, and then when you want to close out the order, you have to sell to close. It's a little it's kind of confusing. It makes sense to me, but it is a little confusing just even talking about it now. So when you buy an option, you're longing the stock. So you want the stock to go up. When you buy a call option, you're longing the stock. You want the stock to go up. So that's what we're doing. We're buying a call option. You can sell a call option. That's like shorting the stock. You want the stock to go down. And it's the opposite with a put. But it gets really confusing. So I'm trying to keep it simple. It's hard. I've tried to do videos on options. I do have one video, but I've tried to do a bunch of videos, and I always had a hard time trying to explain things where it made sense. But anyways, so we're going to do, we picked Costco. We picked a 455 strike, and the expiration date is January 21st. So we have a little time before we can execute. Theta decay. Yeah. When I show you my Excel spreadsheet, hopefully that we can talk more about that. But and then you generally should pick a limit order. Like when I buy stock, I usually just pick the market order because it's so liquid. There's so much trading action that it doesn't matter what you. It doesn't seem to matter too much what you pick. It's usually within pennies. But for options, I do a limit order because there's usually a wider spread. The bid-ask spread is a bit wider. There's less liquidity for options trading than stock trading. So I pick a limit order, and they show you on E-Trade for this particular option, the January 21st 455 strike, the bid is 1670 and the ask is 1705. So obviously you want to pay as little as possible. So maybe even if you bid 1670 and you got it, that would be the ideal situation. But a lot of times you kind of have to go between the bid-ask spread. You don't want to bid you don't want to say too high like 1705 because then you're overpaying for the option. And you can see there's 52 people who are willing Jewel, what's up? Everybody, this Jewel and Arit, they helped me a lot at kind of the mechanics of understanding YouTube and growing my channel. That's what they do. That's their jobs. They help people kind of grow their YouTube channel, or probably other types of things as well. Thanks for joining. So the lower the better. When you buy something, you want to spend as little as possible. So you can see only one person is willing to sell it to you for $16.70. Hey, what's up? Jay Mula. I think that he's my first subscriber, or at least the only person who used to comment. My first 2 months of videos, he was like the only person to comment. So I picked $16.80 as my price that I want to pay. I think when we do the Excel spreadsheet, it may make more sense. And this is the third screen on E-Trade. This is kind of the confirmation page before I place the order, which I'm not going to do, but it's they're confirming it's a buy to open, one contract at $16.70, at $16.80. That's the price. Like they won't sell it to me for higher than $16.80 because that's my limit. Does anybody know, like, I was doing Robinhood. I just did the video today on Robinhood. And I didn't know this, but they make 80% of their revenue comes from, like, their cut of the bid-ask spread. So when people put an order in to their app, a buy or sell order for something, either a stock or an option or an ETF, then they sell those orders out to a market maker, like a third party. Like they'll sell like millions of orders out to somebody else, and then that person goes out in the market and finds someone on the other side of the transaction. So say, for instance, you said, I want to pay $10 for a stock, right? And then they found somebody who was willing to sell it for $9, right? So you put an order in saying, I want to buy this stock for $10, and they actually found someone to sell it for $9. What they would do is they would take the $10 you said you'll pay, but actually pay that person $9 since they're willing to sell it for $9, and they will pocket the dollar. It sounds shady, and it's a little shady, but that's how they make 81% of their revenue comes from this. I forgot what's it called. It's PF. I forgot the name of what it's called. But Bernie Madoff is the one who kind of started that, selling out your orders to a third party, like in a dark pool. It's legal. They call it the dark pool. And actually, I didn't know that much about it. I didn't realize how big it was until yesterday. And I've been reading about it a little bit. But anyways, so if you follow those 3 screenshots, now we can look at it on Excel. Just curious. My first donation ever. This is my first donation. Thank you. That's really nice of you. I appreciate that. So called order flows. Exactly. Thanks. PFOF. Payment for order flow. And reminds me of, I can open up my Excel. I'll open up my Excel model and show you the Robinhood, all my notes. It's just crazy because I used to work in banking and insurance companies, and the way banks make money is yeah. So the way banks make money pretty much is people deposit money into banks. And so annoying. People deposit money into banks, into their savings, and the bank takes that money and gives it out to someone else, someone who needs a loan, and they charge 8-9% maybe on the loan or whatever they charge, and they pay you maybe 0.5%. So they make money on that, and or they invest your money in like maybe treasury bonds, overnight treasury bonds, and they make. I mean, they invest it and make like maybe a 1% return, but they're paying you like maybe 0.3% on your money, and they have billions and billions of dollars in the bank, so that it adds up. So that makes sense. There's really no risk. A bank shouldn't lose money, right? So it seems kind of shady that they're doing. That's how they make their money. But whatever. But anyways, so I bought one call option, and each contract is equal to 100 shares. So if I bought 10 contracts, that would give me the ability to control 1,000 shares of Costco. But I just bought one. And this was the final screen in E-Trade. Okay. And remember, I bid $16.80 for this contract, $16.80. I had to bid at least $16.70. Even at $16.70, I probably wouldn't get a buyer. But at $16.80, I should get a buyer. I mean, I could bid like $15 and save a lot of money, but no one's going to sell it for $15. So $16.80 is what I'm willing to pay. And it's 100 shares because I'm doing one options contract, 100 shares. So it's $1,680. That's how much I have to pay for this if I want to enter into this options agreement. So $1,680. And then, of course, you have to pay it's only 50 cents, the commission from E-Trade. So 50 cents commission. Yeah, you're just trading leverage. That's pretty much what you're doing. And I did a 455 strike. What's the date? It's January. January 21st is the expiration date. So if it goes up to 460, say it goes up to 460, then I could sell my option. I could execute it because it's $5 past the strike price, right? So if it goes up to 460, I can pay $455 for 100 shares of Costco, and then turn around and sell them for $460 right away. So I can make $500. So that's the gain if it went up to $460. Now, obviously, I paid $16.80 for the premium, for the ability to have this option. So obviously, I wanted to go a lot higher because say it went up to 500. Went up to 500 a share before January 21st. Then I can buy 100 shares of Costco for $455 and immediately sell them in the open market for $500 and make $4,500. Let's see. The profit or loss, I should put that there. I would make $2,820 on this particular transaction if it went up to $500 by January 21st. So you're saying you would exercise the option and sell the shares? Right. I got a couple of Vici leaps bleeding out. Well, so Trevor said, so you're saying you would exercise the option and sell the shares? Why not just? I would just sell the option in the open market. But I just thought to explain how options work, I thought it would be easier to explain by saying I have access to 100 shares. But the option is an asset. It can be traded in the open market. There's value in the option. So normally you wouldn't exercise the option. You would just trade it in the open market. Exactly. I never really exercised options before. I just traded. But okay, that's a good point Trevor made. So the expiration is January 21st. So let's just say on December 1st, right? The price of Costco is $500. Now, do you think I can sell the option contract? Just give me, what do you guys think the option contract is worth in the open market? What do you think it's worth if on November 1st, Costco is trading for $500? I don't really read books. I can't stand reading. It's just so boring. I fall asleep. So I don't know. I get more out of like watching YouTube videos. But that's just me. But so what do you guys think? How much do you think the value of the option contract would be in the open market if Costco is trading for $500 a share and it's November 1st? And any guesses? Would it be more? Yeah, okay, 6,000. So would it be more than $4,500? Or would it be less than $4,500? The options contract. It would have to be more than $4,500 because there's value in the time, right? Because at minimum, the minimum you get is $4,500, but there's time to get more. So at that point in time, you have to get $4,500 at a minimum. But now you have a few months until your option contract expires, so there's value in the time. Sure, it could go down, of course, but you could just sell it right on the spot. So it would have to be more than $4,500. I don't know. I mean, that's why I hate trading options, because maybe you guys can teach me a little bit about this. I just don't get like it's such an illiquid market. It seems like you never get a good price for your money. Like there's so many, where's this other page? like you can see there's only like, this is the calls section. There's only one contract at 415. So the one we're looking at only has 3 contracts in the market. And there's open interest. So people are interested in making a trade with you. There's 456 contracts out there where people are interested in doing this type of contract. But there's only 3 that are actually executed. I mean, that's really small, 3 contracts. When you buy a stock, sometimes there's billions of shares. The shares are identical, right? One share of Apple like equals the same amount. Like your share of Apple is no different than my share of Apple. It's the same exact value, right? But options are totally different. Your option contract, assuming, you know, if it has different expiration, strike prices, they're all different values. Yeah, I used to do covered calls. Does anybody know what covered calls are? The order, that's interesting. I didn't realize, I thought this was the entire market, the open interest and the volume. So you're saying this is just within E-Trade. Okay. So yeah, if you go to Robinhood, there's more liquidity. So you might be able to get better. Yeah, covered calls are kind of the safest bet. But when you sell options, the most risky investment you can do is sell an uncovered call. So if you have like if you did the same exact trade, this Costco contract 116.80. If you sold this call option, does anybody know what they would receive from selling this call option? Like how much money they would get? So if you want on the other side of this trade, instead of buying the call option, you sold the call option, you would actually receive, $1,680 would be deposited into your brokerage account. That seems like a pretty good deal, right? $1,680 will be deposited into your account. But now you're short Costco, so you would want Costco to go down, or at least not go past 455. Or if it did go past 455, you want it to go to like maybe like, let's see, 470 is like break even. Yeah. So like around 472, because once it broke through 472, then you would lose on the trade. Because if you, I wouldn't bet against Costco either. Because if you sold the call option on Costco, right? If you own 100 shares of Costco, then even if the stock price of Costco goes up to like 600, it would suck, but they would just take your 100 shares of Costco out of your account. But if you sold the call option and you didn't own any Costco shares, right, and it went to 600, you received 1,680 from selling somebody the right to buy Costco for $4.55, right? But if it hit 600, you would lose $12,800 because say the person exercised when it expired January 21st, you'd be forced to buy 100 shares of Costco in the open market and sell it for $4.55. So that's the thing. When you sell call options, your loss amount is infinity, right? Because theoretically, Costco could go up to whatever. It could go up to 10,000 share, which it won't, but then you would lose $1 million. You'd have to buy Costco for $10,000 a share and sell to somebody for $4.55. It's the riskiest investment, uncover calls. But if you buy call options, there's no risk really. You might lose your premium, but you won't lose your house. Plus the profit from 440 if you're a strike at 445. Well, I'm not sure. Wait, 1680 plus the profits from 440 to 445. But right, if in the first example, if you okay, let's do the selling call option. So if it went up to 460, well, I have to do the opposite, but okay, if it went up to 460, you would make 1180 on your trade because you got the 1680 premium, but you lost $500. Costco breaking through 445 by 5, so you'd lose $500 on the trade. 465, you would only make 680. You know, the force. What's going on? Yeah, so like 472 is your break-even point, probably for both. 472 is your break-even point, pretty close to 472. So that's call options. I mean, but the thing is, the option doesn't move perfectly because of this of the expiration date. If the expiration date is far out, the option contract sometimes moves opposite. No, I don't really short stocks. I used to do a lot of things in my 20s, but I think the more money you have, I think the less beneficial these types of things are. So I just kind of like try to buy good companies and hold them. Like Warren Buffett tries to explain, like once you hit certain thresholds, like it doesn't make sense to do certain things. Like the benefit is more limited. Because even if I get lucky and I make money on some of these, like an option or a shorting, you know, the risk return isn't always there. So what do you guys think? Like, I mean, I think it's pretty straightforward buying call options. No, I don't do crypto. I did want to buy AMC call options. Oh, G9, that was up like 50% today, right? What happens to call options during an all-in acquisition? There's still value in the option, but it would be helpful if you ask a question. If you kind of clarify, are you saying you you bought a call or sold a call, or bought a put or sold a put? Because it's hard to really answer unless you gave a little more info like that. You don't have to give a strike price or anything like that, but like if you sold call options and the company went bankrupt, that's like the ideal scenario because you're short in the stock. Like if you buy puts or sell calls and a company goes bankrupt, that's the ideal situation. But if you buy calls or sell puts, then the higher the stock price goes, the better. I don't know what you have going on with other trades. You might have a lot of exposure to, like, if you were doing Costco and you sold a call option, you might have a ton of shares of Costco, but you just sold a call option to kind of hedge yourself. So you may not want them to go bankrupt, but so yeah, people get confused because if you buy in the money call options, like if you bought the 415 strike price, you're already in the money. So how could you lose, right? But you have to pay so much in premium. I'm looking at the wrong side. Okay, 415. The premium is just so high. Say it's 30, even if it's 38.45, the best you can get. If you bought one contract of the 415 strike price, this one on top, the 415, and Costco is trading at 440, so you're already in the money, but you had to pay $3,800 for the contract. So off the bat, you're up $2,500. The difference between the current price and the strike price, but you're already at a $1,300 loss. So it's not like in the money you guarantee to make money. It's you just pay a higher premium. That's what I have a hard time with. Like if you go through it, like I don't know. It doesn't seem like it works out sometimes, but yeah, if a company merges with another company, your option is still active. It might be converted to the new entity, but you don't lose on your option if they merge with someone, or if a company goes bankrupt. It's not like there's still value in it. It might change some of the terms, but because if you sold call options and a company went bankrupt, well, then you just collect your premium. But if you buy put options and the company went bankrupt, then you make a killing, because then you could buy the stock for zero and sell it for whatever your strike price is. But the option would still be valid. It'd still be in the market even if the company went bankrupt. This all acquisition is making 3 shares of GNOG into 1 share. Would they just cut me down to 1 option? They would either adjust the option proportionally based on the new entity, or they would just give you cash based on the value of the option. It's kind of like when a company merges and they say every shares of this company will give you 8 shares of this company. But what if you only have 4 shares of a company? You don't have 5. They would just pay you cash. I'll be right back. I gotta go to the bathroom. Smoke break. But I when I first learned about covered calls, I was like, this is free money, because I could just sell options out of the money and collect the premiums. But if you go so far out of the money, you get hardly any premium out of it. And if the stock price, that I lost my Facebook shares. I kind of regret selling covered calls on Facebook because it went up so much, and then they took my Facebook shares out. Covered calls, I mean a little bit, a few hundred, a few thousand. My best option was I bought when Bear Stearns filed bankruptcy in 2008, the Great Recession. It was down to like, I think $1 a share. So I bought call options at like $5. I think I'm remembering it. I think these numbers are right. And then JP Morgan acquired them for $10. So I got paid $10 for my so that was probably my best trade, options trade. I made a decent amount of money on that one. Roll your cover calls for credit. Yeah, that's true. I could I just stopped doing options. It just seemed like too much work. You lose on the upside or you lose on the downside. So it's just so this is what I'm doing tomorrow. Huya is the video, like the Twitch of China. Huya. It seems like China has like these massive companies. There's so many people in China. It's the same as Twitch. It's mainly video game streaming, but they also have other things as well, of course. But similar to Twitch video game streaming is probably the biggest. But people do anything really on Twitch. Anybody have any info on this company? Their financials look really good. I mean, 11 billion yuan of revenue, which is like just divide by 7, so it's, what is that, like 1.4 billion US dollars, and they grew it from 4.6 billion to 11 billion, and it went from a loss. Oh, it's mainly from other income and expenses stuff. So it looks good there. But these Chinese companies, they look so good, but they keep going down. They're generating lots of free cash flow. They are still negative retained earnings, so they're not profitable yet. But so has anybody looked at this company? Any information? This is my thing. I wake up in the morning. I try to get my spreadsheet at least prepped for the video. I wake up in the morning. I spend like 2 hours or 3 hours trying to get information about the company, to talk about it, and chart 2.7 billion looks like a deal, but too many politics. Yeah, China is just. I try to understand. I go through their financial. I'll try to understand like what this other income and expense item is to talk about. If there's any glaring things, I try to figure out what they are. I've been watching other YouTube videos. That's helped a lot because they compete with Tencent. I think Tencent's their biggest shareholder. Maybe okay. Let's see. Yeah, right here. Tencent owns 47% of Huya. It's very, what's the word? It's very incestual, the markets. You'll notice like companies are very involved with each other. You think they're competitors, but yet they own each other, or they own someone that owns another company. They're all like AppCellera. It looks good. I opened a new account on E-Trade where I'm going to start investing in riskier stocks. And AppCellera was the first stock I bought. It never seems like I have money. Like it's always like it all goes to taxes. I'm down like 25% on Momo. And I got Momo. I thought I got Momo at a low point. I normally wouldn't buy a stock like Momo. I got it when it was down 40, 50%, but then it went down another 25%. What the hell's going on? All these Chinese stocks are so undervalued. Baidu is coming out. Baidu should be coming out tomorrow. It's going. It's slower because I'm streaming. Baidu is tomorrow. They're so undervalued, these Chinese stocks, but they may never go up. Algonquin, Power and Utilities, and then Robinhood. Right, if the numbers are accurate, right? Exactly. If I buy a U.S. stock, a stock in the U.S., I'm pretty comfortable the numbers are accurate. I would say I'm kind of comfortable when it's not traded in the United States. And when it's traded in China, I'd say I'm like 80, 90% comfortable that it's right. Yeah, that's definitely something to consider. Earnings per share, that they should pay attention. If they have a profit, they should pay. Yeah, that makes sense. Did anybody watch the Corsair video? It's one of my better videos. 616 views, 5.5 minute average time. But you can see I don't make. I get paid $3 an hour from YouTube. I barely make even $20 a day. So it doesn't really pay. Maybe it will in another year or two, but who's dependent on Amazon? Luckin Coffee? Corsair. The audio got screwed up on Corsair. It really bothered me. I don't know what's going on. Like every week, I have one video that's the sound is all messed up. But yeah, it looks good, Corsair. There was a funny comment in the Corsair video. Let me see if I can find it. This is funny. Perhaps you can buy one of their webcams to make your videos. It's true. It's just ridiculous. I paid $200 for this freaking microphone. I ordered another $200 microphone, a different one. If it's not the microphone, it must be the video editing software I have. But so yeah, anybody want to? This is a good time to ask questions about my Excel file. If anybody has questions, I could show you. I could show you the formulas. I mean, it's the way I came up with my Excel file. I just watched YouTube videos and just kind of copied and just put it all together. And so it's not like secret. Yeah, one video go viral. That'd be nice. This is Huya. You see, it's just like all the Chinese stocks. They're trading at all-time lows. BR. Leave a comment if you want one of those videos, and that's the best way because I always reply to all comments. So I'll make sure. So you can see, this is the videos I listed. AMD, American, my AMD, what can, SC Works, HIMS. What's HIMS? Somebody's just a Caster Maritime, Lumen Technologies, Vaxart, what's it called? Carnival, Ideanomics, British American Tobacco, Walgreens, WIMI. How do you make the Excel formulas? Oh, my best trade of all time? Well, my best trade of all time was buying a business. But that's not in the stock market. A percentage wise, it was Apple. I made like 1,200% on Apple. But dollar wise, I don't know. Maybe Berkshire Hathaway. But Berkshire Hathaway, I'm only up like maybe 35%, but that's still like $150,000. Every video is how to value stocks. That's every video. That's what I do every video. I have to go through my, that's hard to think. I did do a video. Well, I could tell you my worst trade of all time. That's easy because that sticks in my memory. Like, but on my 1,000 sub video, I showed you what I thought was my best trade. Was I sold my entire portfolio. It was in March and April, like a month before the crash. Or maybe February, I forgot. I sold my entire portfolio right before the market crash in 2020, like a month before at the very peak. And I thought it was a genius. But it came right back up past to where it was before. So if I would have held it, it would have been. But my worst trade was the first video I was UCO and USO. That's the first model I created on UCO and USO. That predated this model because I wanted to understand how they worked. But yeah, I lost 40,000 from those two stocks. I didn't realize the decay risk in those two trades. I kept averaging down because when oil was really low at one point, I thought these double and triple leveraged ETFs were the way to go. So I kept adding to it. Even though oil went up overall at some points, I was still down. But you can watch the video. I try to explain how it works. You pretty much can't make money in those leveraged ETFs. They just go down over time. And they just keep doing reverse stock splits. So it seems, so even if the stock price, like even if you're up to like, if you buy at $10 a share, and in 5 years, if you're at $10 a share, you're down like 80, 90% because of all the reverse stock splits. What are your thoughts on inflation and the Federal Reserve pumping lots of money? I'm not worried about that at all. They've been doing that for forever. No, I don't think there's too much concern about those things. In certain countries, there is a lot. There is some risk to that. There's some countries that have had hyperinflation, like in Venezuela, but we're too strong of an economy for that to happen. So I wouldn't worry about that too much. But there probably will be a market crash. There's always a crash every 20, 30 years. But that's a good time to buy if there's a crash. They must have. Oh, so slow. You can see like it was $15,000 a share at its peak. It was never 15,000 because of all the reverse stock splits. Oh yeah, it's a big bubble, Tesla. It's a real big bubble. So if you invested $10,000 into UCO 10 years ago, you'd be at $91 today. It's just ridiculous. But Tesla, even when they weren't making money, their stock was amazing. So people just keep buying it. But yeah, I want to short Tesla, but I can't. I'm too worried about losing a lot of money. But yeah, it's got to come down. It has to. It shouldn't be valued that high. It's not that great of a company. Especially when they lose their tax credits. But I wouldn't bet against them. That's my worst investment, not investing in Tesla. That's my worst. I had two people, one in like 2014, telling me to invest in Tesla, and my friend in like 2017. And they both made like 15x return. But I didn't do it. I couldn't do it. I looked at their financials and it looked terrible. But I'm going to buy an individual stock so far. I haven't beat this. Yeah, just buy the S&P 500. There's no reason to try to beat the market. I mean, you could learn about the market, buy the S&P 500 and just try to learn about it. Yeah, Moderna went up a lot today, right? It went up like 25%, right? I don't get it. Moderna is just, it doesn't, they've only had one vaccine or medication that's been approved by the FDA. The COVID vaccine. They've never had anything else approved. That's the only one. Pfizer is a good company, but Moderna, I don't get it. But yeah, it went up 17% today. But yeah, but I'm wrong a lot. Like, I think these things, and then I realize, like, I was missing something. I didn't. Canadian stocks. I mean, there's some good Canadian stocks that trade in the U.S. What's that company that builds websites for like you can have your website, and you could have customers buy and sell things through your website with their Shopify. Yeah, that's a good company, Shopify. Yeah, there's some good Canadian stocks out there. I like what do I like? I can't remember. It's a weird name. It's I think it's Alimentation Couche-Tard. That looks really good. I like that stock. I guess if I lived in Canada, I probably would invest on some stocks on the TSX, but it just seems like U.S. stocks do much better than any of the stocks overall. So that's why I just kind of usually stick with the U.S. But I have VT, the Vanguard Total Index Fund. I have a lot of money in that. So I got exposure to other countries. And Momo I picked up. But yeah, maybe I'll look at some Canadian stocks. But some of the ones I like, I don't know if they trade in the US. They probably do. They probably trade in pink sheets. Yeah. Couche-Tard trades on the pink sheets. So I could buy it, I guess. Momo. God, what a terrible. This is the killer of the stock. So I got Momo. Yeah, it was up to, look at it, over 50. I got it at like 20. And I thought I had it for a steal, and now it's down to like 13. So I'm down like. Ad blocker? Why? I'm going to write that down. Ad blocker, yeah, on Chrome. That's a good idea. Yeah, let me know if anybody wants to do. I can invite them on the live stream, and then we can host the live stream together. Like you can talk like me if you have a good topic you want to talk about. Should sell covered calls to reduce your cost basis. We talked about that earlier, covered calls. I just don't. It's kind of like you like 10 times you make like you average $1,000. You average like $500 on 10 trades. So you $5,000. Then one trade, your stock goes through the roof, and you lost out on like $10,000 of gains. So I'm just not a big fan of options. I don't. Yeah, I have my own business. That's my best investment. Not financially, my best investment, my own business. I only paid like $80,000 for it, and then and made like a 20x return over. But I have to work for it. I can't just sit back. I have to. That's my life. Somebody wants to buy it. I was gonna do a video on that. Somebody wants to buy it for like $500,000, but if I was making money on YouTube where I could kind of support myself somewhat, I would actually sell it. But I'd just be too bored without it, and I'm not making any money. I should sell covered calls on my business. Covered calls don't reduce your cost basis. Yes, covered calls, they don't reduce your cost basis, but they can, it's just a hedge. Oh, this guy, Bennett Williams, knows about my company. He's the only one who knows about my company. He knows it really well. He's been a customer and an employee, and he's currently an employee at my company. So he knows it better than almost anyone. But yeah, give me ideas about what to do on these live streams. I actually enjoy live streams a lot more than shooting videos. I don't really like making videos because I'm by myself. I don't feel like it's much more enjoyable talking to other people. But yeah, I'm gonna jump off. I have to get something done. But yeah, leave a comment. Let me know if you have ideas for live streams, and email me if you want to be part of the live stream. If there's like a topic. And I'm going to have a CEO of a company. He's going to do a live stream with me, and we're going to go through my video, my Excel file. Okay, I'll see you later. Yeah, I don't announce the live streams. It's just whenever I'm in the mood, but I probably will do it. Start like having something consistent. Okay, I'll see you later. Thanks for coming.